All right. Good morning, everybody. Welcome back to another live stream. And check out that intro, huh? Pretty nice. Looks really good. Shout out to the producer for putting that together. We got Christmas here, counting down the days. Yeah, maybe we should do the 25 days of Christmas here on the stream. Hope everyone had a nice Thanksgiving. For those who celebrate in the United States, we are back in the office. We're back to the grind when it comes to markets. Very interesting stuff took place over the last few days. In today's live stream, as always, we'll be taking a look at, of course, the markets, what's going on out there. We do have a little bit of red coming in today. NASDAQ's down a bit, S&P's down a bit. Bitcoin took a tumble here. I don't know if you guys saw this, down 5% or so here. Bitcoin coming down lower here this morning. And I got to say, I got to get I got to get used to being back in the saddle here. It's been a minute since I've streamed. Actually, since Wednesday of last week. Usually I go from streaming every day. So we'll see. We'll see how it goes this week as I get used to it again. Anyways, Bitcoin took a tumble here, had a little bit of a recovery during Thanksgiving week alongside stocks, but I can't help but wonder what is going on here. You have something kind of interesting taking place where traditional risk assets like stocks are overall doing quite well. I mean, you've had a really nice recovery. That Thanksgiving week, I read that it was like the best one since like the 80s or 90s or something like that. Absolutely incredible move to the upside, kind of all happening at once. Really big push there. And then all of a sudden, you have Bitcoin not playing nicely. In fact, Bitcoin's not that far off from putting in another low. Kind of interesting. So the question is this telling that the rest of the market is likely to tumble over, or is something just wrong with Bitcoin specifically? That's really the question. Let's take a look around, continue our move here. Gold is up. We're looking good on our gold setups. We're actually breaking through this level of resistance. I'd love to see this. This was kind of our line in the sand here for the bears. So I'm glad to see this breaking higher here today. Sellers so far don't seem to be holding very well at this area. In fact, we closed above this close. We look good. I think that gold can continue to push higher. Silver looks incredible. Congratulations. I mean, if you're in gold longs like myself, that's great. Gold is great. Silver is absolutely putting it to shame. Look at this move. We are fresh all-time highs. We have blasted through. We look excellent. Silver looks like a absolute monster right now. With just in a couple days, we're seeing a 18, 19% move higher. Absolutely wild. That's a massive move higher. Dollar index here, a little softer here today as well, kind of still pulling back off of these highs around 100. We'll see where that one wants to go. I mentioned in my Sunday video, dollar has two really interesting dynamics to it. The new Fed chair, I don't know if you guys have heard this. Maybe I'll make this about my video today. The new Fed chair seems likely to be Kevin Hassett. I talked about this in my Sunday video. And if he is anything, he is a dove. Why would Trump pick Kevin Hassett? Well, the betting markets have a good probability that he is likely to be the pick from the president because he is a pretty strong Republican in the sense that he subscribes to the idea of lower interest rates, spur economic growth, higher economic growth, and lower taxes. How do you replace the tax revenue? Well, the idea or the traditional thought processes if the economy roars really strong, then there will be more tax revenue regardless. It's an interesting philosophy because, of course, with every philosophy in politics or government or economics, there's a counter policy. Of course, people would say that doesn't work and that the inflation will outsize the growth that you have in the economy. But the idea basically of this chair and the Republican kind of mantra is cut rates, lower taxes, cause the economy to boom, and then there will be more tax revenue because of it. That's the theory. Again, with every theory, there are, counter theories, etc. Point being, he is probably bearish for the dollar. However, at the same time, the dollar also looks strong relative to peers because it has some of the best economic stats. If you are comparing, and I want to show you guys this because, oh boy, have I been waiting for this. Let me see. Uh-oh, what's this? Wait. What's that? Nick, I use Edge Finder every day. I love the Edge Finder. It's the best tool in the whole world. I bought it on the Black Friday discount because it was on super sale. And wait, now there's another feature that just got dropped? Yup. Take a look. We have the G7 macroeconomic matrix. Check it out. I'm so excited about this feature because if you are somebody who tracks currencies and you look at them from a bigger picture view, you're not necessarily a scalper or a day trader. This is probably not the tool for a day trader or a scalper, but stick with me. It's still good knowledge, even if you are. What you're looking at is the G7 macroeconomic matrix. This is based off of a very simple concept called real yields. Look it up, do your research. This concept, this page is built around real yields, and there is, historically speaking, strong evidence to suggest through numerous researches that over longer stretches of time, currencies tend to drift in the direction of real yield. What is real yield? It's interest rates offered by that country minus the inflation that that currency experiences. The dollar is on top because the dollar has higher interest rates than other places, barring the UK, but way better than the UK. We have 3% inflation, 4% interest rate, meaning there's a positive collection for holding the dollar, right? Because you get paid this amount in interest approximately, right? You can go look at the 10-year yield, et cetera, whatever you buy in terms of a bond. And then your erosion to your currency is 3% right now, year over year. This is a cool tool because over the longer stretch, why is the dollar likely to rise in my view? Well, it's because GDP growth, US dollars on top. Unemployment rate is relatively low compared to most of the other currencies other than Japan. And inflation, while at 3%, which is kind of in the middle of this, 3% with high growth and high interest rates makes the dollar very attractive. That is why over the longer stretch, I still think US dollar is likely to be strong versus its peers. That's my thought process. Now, I'm not long the dollar aggressively at this time. I do have one small short position on the pound US dollar, but I'd be looking over the longer stretch if some of the more momentum kind of things align. I think there is some opportunity to get long the dollar and to continue to trade it to the upwards direction. You can see our scoring matrix here on how we did this. This new feature is available within Edge Finder under economic heat maps. If you have this Edge Finder already, check it out. Real yield is essentially interest rates minus inflation, and it shows you the real, I mean, it's in the name, it's the real yield of holding that currency, right? Why is the dollar so attractive? Because it offers a higher interest rate than it erodes in inflation. And it also is supported by stronger than its peers growth. Again, if you are bearish on the dollar because you think the economy is going to crash, well, here's the problem with that thinking. Currencies trade relative to others. If you think the US economy is going to crash, what do you think is going to happen to the other currencies who already have no growth? You see what I'm saying? It's easy to say, oh, US economy, it's in the shambles. Well, remember, currencies trade relative to other currencies' economic growth. It doesn't mean the dollar can't go lower. It just means that I personally think path of least resistance is for the dollar to actually stay strong relative to peers if we're looking at a real yield and economic growth basis. So we'll see. That's my thought process on why I think the dollar can actually be strong in 2026. Bitcoin pushing lower here this morning. Let's take a look at US stocks. US stocks rebounding a little bit from those lows, but still, we are not too far off. I mean, you have to give credit to the bulls here. We are less than 2% away from all-time trading highs on the S&P 500. We ripperooskied in Thanksgiving week. I mean, Critics would say that this was a low volume week, and now that the volume is coming back in, sellers are going to take it from here. I've seen that claim a lot over social media. Maybe, but again, to me, trend is still up, and you can't fight trend. I mean, you can, but it's quite a difficult thing. I've found over the years it's much easier to ride trends than to try and fight them. And I think that if you're shorting S&P 500 in a upward trend, moving averages aligned, I think you're fighting the wind, right? You're trying to sail upriver. You're trying to sail against the wind. I think that right now, I think personally, could be wrong, as we always can, and we take losses on this channel if necessary when we are wrong. But I think this market wants to push through all-time highs before end of year. And I will also say I would not be shocked if you see SPX 7,000 by end of year. Pretty remarkable year so far for the stock market, given that we had a major stock market sell-off in February through April. We had a down 22% or so on the S&P 500. That move for the NASDAQ was down 26%. Pretty good little haircut there. And sentiment, believe it or not, despite such a resounding move back up, what's interesting is market sentiment is still very pessimistic out there. Okay. When it comes to market sentiment, the popular crowd, the majority of respondents here are saying they either neutral on this market or bearish on this market. It is actually the minority thinking to be bullish on this market, at least in terms of investor sentiment survey. I find this to be really interesting and actually quite an interesting dynamic, because what most people are thinking is, hey, market's gone up a lot. I'm gonna be, bearish. It's got to come back down. This is too high. It's going to come down, right? Well, here's the difficulty with thinking that. You're not alone. In fact, you are part of the majority, and the market tends to, not always, but it tends to find a good way of taking money from the majority of people. So if the majority are neutral to bearish, I would just be careful personally on the short side. That's my thought process on it. I think this market will continue to squeeze higher. You have several factors that I think will be supportive of this. For example, tax implications is a big one, right? So people who are holding on to winners this year, if you close out of those winners, you have to pay taxes on them. So that is a built-in reason for why I think fourth quarter, Q4, is strong for stocks, is because a lot of people choose to say, okay, I've got some really big winners. I might as well just hold them to the end of this year. And then next year, I'll go ahead and take those profits off the table so I can not realize and have to pay taxes on that right away. You see what I'm saying? So you can postpone your taxes. This is a completely legal way, not tax advice at all. I'm not a accountant, so please consult your accountant. But tax, I would look up on your own time the implications in U.S. kind of tax law, how that dynamic plays out. But typically, we hear this every year around the fourth quarters. People hold on to their winners. Not everyone, of course, but a lot of people choose to hold on to their winners and postpone paying taxes by waiting to close out of them until next year. Okay, that by its very nature leads to a lot of selling that might have happened gets postponed. So you have this upward drift effect, right? If less people are selling stuff, less people are taking profits. They're waiting to take profits. And you also have the effect of portfolio managers who maybe missed out on parts of this rally here this year, who may be looking for every chance. Like this chance right here, I think that might have been for a lot of portfolio managers who have missed the rally here this year and this move here. That dip got bought, in my personal view, because I think a lot of people missed the rally and they are feeling the pressure to showcase to their clients, right? Portfolio managers obviously manage money on behalf of clients. I think they're feeling the pressure to go to them and say, hey, at the Christmas party this year, hey, yeah, we were long stocks. We did okay. This is a good year. We caught the rebound. Whereas what the worst thing you could say as a portfolio manager, as I've said many times in my channel, would be, hey, if let's say you're managing a couple $1 million for a wealthy investor, and that wealthy investor comes to you at the Christmas party and says, hey, how are we doing this year? What did we do, right? What did you do with my money, basically? And you say to them in response, oh yeah, we sold all your stocks in the April low. That's unacceptable, right? People who don't know much about investing will just be furious with you. You know, obviously there were reasons to be worried at that time, but now you can't, that's not a justifiable answer. Portfolio managers will look really silly if they have to say, hey, yeah, we're not long stocks, we've missed this whole rally, right? So I think there's a chase that's going on. I think you have a chase going on. I think you have tax implications that are causing people to wait. And I think the path of least resistance for this market is to continue to move higher. I am long, I'll remain long until something changes in the economic data or sentiment. But right now, we're getting some strong readings specifically on the Russell and the Dow Jones. And I want to show you something. Why isn't the NASDAQ on this? Well, at least NASDAQ and S&P 500, the last time I checked, the put-call ratio, yeah. So check this out. Boom. Put-to-call ratio for me right now is where I'm not adding any longs because, check this out, we had a huge surge in call volume. A lot of bullishness came back into this market, at least in the latest options flow data that we can see here from the put to call ratio. If I take a look at the NASDAQ, let's see if it's similar here. Let's see. Not quite. So S&P 500, interestingly, had a huge call volume come in. And so that was sort of a short term that's going to make our scoring algorithm put a pause on bullishness, right? It's going to say, oh, crowd just got really, a surge of calls, be careful there, right? So, and I agree with that, right? I don't think we want to be chasing here at this level, but that pullback that we saw produced some really good opportunities to buy the dip. So we'll see how this all plays out, but that's my thought process. Is I think you maintain that bullish outlook on US stocks. I'm also bullish on gold. I have a position there. I think they're going to cut interest rates in December. And we've got price action that looks really constructive, breaking through these highs. This gold signal on Edgefinder is turning out really good here. I'm staying with that trade as well. Gold bullishness coming from a +6 score. Technical read looks really good, and economic data looking like we're going to get some rate cuts, which I think is bullish for gold here, at least in the time being. VIX is up here this morning about 10%. Of course, given that we just dropped off a cliff, that's not saying as much, right? VIX volatility dropping significantly during last week's kind of low vol run up in stocks. Euro dollar making a push up to some resistance here. Pound dollar. Let me see what else we have in terms of setups here. Dollar CAD getting a bearish reading. That's kind of interesting. Let's see what else. We have quite a number of setups here today on Edgefinder. We've got a lot of stuff to do for sure. Let's see, what are yields doing today? 10-year yield is up today. 2-year yield is up, possibly in tandem with the reason Bitcoin is lower. US oil still kind of holding this downward trend line. What's the Japanese yen doing? Keep an eye on that one here. Japanese 10-year yield. Ooh, yeah, that's why Bitcoin's down. The 10-year on the Japanese government bond yields are jumping here today pretty significantly. And this is the worry, right? The worry for Bitcoin is attached to, at least it seems like the number one culprit is Japanese government bonds. And people, when you say that to someone who isn't a market junkie like some of us, they're like, what are you talking about? What does Bitcoin have to do with the Japanese bonds, right? And it's actually quite a lot, because if you're talking about Japanese bonds, it's the carry trade. And if you don't know, I'm not going to go incredibly in depth on this in today's stream because we got more stuff to look at. But a lot of people across the world, hedge funds, portfolio managers, they borrow money in Japan because it has a low interest rate, and they use that funds to buy things like Bitcoin, real estate, bonds globally, where they can get higher yield or perceived higher yield. But if that borrowing rate in Japan becomes more expensive, the opposite can happen, where people unwind that trade. They sell their Bitcoin, they sell their real estate, they sell their bonds to cover their higher expense in Japan. It makes the trade less attractive. If there's a lot of, essentially borrow from Japan, use that money to buy higher yielding assets internationally. If that unwinds, guess where it comes out of first? It seems to be coming out of Bitcoin first, right? Because this is a product that a lot of people have. It is a very volatile asset, and people kind of grab for that first when they're trying to raise cash, it seems. We also know there's a lot of institutional ownership of Bitcoin here that has taken place in the last, the ETFs getting involved, IBIT, BitI. There's all sorts of different ETFs that track Bitcoin and Ethereum and all that stuff nowadays. So that's a lot of institutional money that's moving around in there. And so they can very quickly unwind their positioning in Bitcoin to cover some of that trade. So it's very connected to the Japanese yen. It's very interesting how, Japanese yen is moving up here a little bit today, actually, which is kind of interesting. Dollar yen moving lower, euro yen moving lower, Swiss yen, CAD yen, Aussie yen. We'll see. We'll keep an eye on that. I've got my eye on some of the yen crosses. Aussie yen might be one that's interesting to me. If I go Aussie yen, I'd like a little bit more of a pullback on this one. I'd love to see if this thing were to give a little bit of a spike to the downside. Maybe I could look at that a little closer. Yes, yields are high because of Ueda's hawkish statements. I saw some of that as well. Yen really strong today. Absolutely, it is. Look at that. We'll see. We'll see how that all plays out. But I do think that is very much why crypto is down. And this just goes to show, like, if you are living in a world, let me just tell you something real quick. A couple years ago, I saw it all the time when it came to the conversation around crypto. It's decentralized. It's a beautiful thing that governments can't control and that hedge funds can't bully. And it's the future of money. Look, the reality is that markets are interconnected, and with institutional money playing a hand in what happens with crypto, in my personal opinion, it is essentially a leveraged tech stock. It is essentially like a big leveraged tech stock. Maybe someday, and I hope it'd be cool, maybe someday there will be some sort of international currency crisis fallout. Maybe cryptocurrency becomes something that it is not yet today, in my personal opinion. Right now, Bitcoin is a leveraged tech stock. It is a risk asset. It moves up with the NASDAQ, it moves down with the NASDAQ. And in many cases, it is very sensitive to the rest of the market. It is not disconnected from the rest of the market. It is not unique in the sense that, it's a risk asset. I'm not saying it's bad. I'm just saying it's a silly thing to think like crypto, people are buying Bitcoin because they believe it's money and they want to use it. Some people are, but the vast majority of money moving around in Bitcoin is speculation. People who want to buy it now and sell it for a profit to the next guy, or investors, hedge funds, portfolio managers who want to cash in on the marketing around Bitcoin, right? There's so much of that going on that I think like the true, it's money value is probably like way lower, right? If this thing were to really have a falling out and people no longer liked it, it's probably going to do what it's done many times, which is, kind of reset to where people who truly believe in it value it, or would be willing to buy it, which is, much lower. In my personal opinion, I'm not a Bitcoin bear. And I know it sounds like I am, but I'm not bearish on Bitcoin. I'm not, a hater of Bitcoin by any means. It's just that I think we have to be very honest about the idea that it is connected to the rest of the market. It is a risk asset, and it's it's not unique in that sense. It is subject to the same forces that the rest of the market is. So that's my thought process on it. I love trading Bitcoin. When Bitcoin is when we're in a risk on season and things look really strong, I absolutely love trading Bitcoin. But right now, there's a lot of worries about the Bank of Japan stuff. And if global liquidity dries up a little bit with the Bank of Japan raising interest rates, if that happens, it could be a little bit troublesome for the crypto crowd. That being said, it could also be troublesome for other places, right? Maybe that's a little bit of part of the reason why stocks are a little bit softer here today. The concerns around the carry trade in Japan, et cetera. It is a real thing, and it does matter to, Japan is connected to the US too, right? That's what I mean. People say like, oh, what does Japan have to do with it? Everything, right? Japan is essentially kind of a US very close ally, global banking hub. It matters substantially to global liquidity. And when you start to embrace fundamentals, what you realize is like it all is connected. You can't if you are a fundamental or a macro trader, or in my opinion, everyone should, even if you're not a macro trader, you should be aware of these things. Gold does not trade in isolation. The Dow Jones, the Kiwi dollar, the pound yen, the US dollar, none of this trades in isolation. It all trades connected. We are on a global financial system. What happens over here impacts over here. What happens over here impacts over here. What happens in the gold market can impact other places. Very important that we accept that and acknowledge that as a macro trader, you may execute trades only on gold or only on euro dollar. But if you're truly a macro trader, you trade everything. You watch the markets as a collection, as a collective. It's a full picture. You have to kind of keep an open eye to everything that's going on. And keeping an eye on everything is pretty much impossible without the right tools. I mean, that's why we've built what we have. I mentioned this earlier. Here's the new G7 macro economic matrix. So what this is showing you is GDP growth comparisons. Like, there's too much data to do all of this in your head. For example, if I want to take a closer look at the US economy, I can do so with the economic heat map, because what it does is it shows me all of the impacts on the US dollar, so that I don't have to do all of this in my head. I can look at the latest GDP statistics, PMI statistics, inflation statistics like the CPI, PPI, PCI, and what this actually means to the currency pairs, commodities, indices that I'm trading, or Bitcoin, right? This also can this same chart, you don't see anything about Bitcoin on here, but it dramatically impacts Bitcoin. If you don't accept that, again, you're trading in the blind. You don't fully know that, look, the non-farm payroll has huge implications on Bitcoin. May not seem like it, but it does. If jobs are good, the environment is a little healthier. That's better for Bitcoin. If jobs are bad, that's worrisome for Bitcoin, right? Because a bad environment is not hospitable for Bitcoin. Same with gold. Reverse that thinking. If jobs are bad, that's good for gold, because it's a weaker dollar, weaker fiat currency, as they may cut interest rates and print more money. That's good for gold, right? These things are interconnected. And once you start knowing that, once you start understanding macro is king, you'll start to understand why moves are happening. And rather than just being confused, why is this up? Why is this down? You'll actually have an understanding of the trends that are taking place. Having the right tools to track that is critical. I have been mentioning, seasonally, S&P 500 has played ball completely. However, where we've had some trouble is actually the Bitcoin complete fallout from seasonality, right? 10-year average performance for Bitcoin usually is really solid right now. Last November, we were up 30+% for Bitcoin in a month. This November, we lost 30%. The thing is really volatile, and we completely fell out of seasonality this year with Bitcoin. So nothing works all of the time. This is why when we use the top setups indicator, right? The top setups does not overvalue one indicator. Seasonality, just because it doesn't work one year, does not mean it is useless. But we also don't want to draw the conclusion that seasonality is the only thing that we should look at. We don't want to only look at commitment of traders data. We don't want to only look at what the crowd is doing. We don't want to only look at GDP stats or PMIs. We want to look at all of it, right? To build a logical trade plan, we don't overvalue one idea. We stack probabilities. We build confluence to build the highest probability potential setups, and that is what EdgeFinder does automatically. I gotta show you guys something. I got this just here for us, so check it out. Today, I know it doesn't look perfectly in line with today's stream, but we're doing Cyber Monday today. We're extending our same deal that we did for Black Friday, but we are currently doing our biggest discount series of the year. Today is Cyber Monday. If you've been waiting, what better day to pick up software that helps you to find better trading ideas than, of course, what we're doing here on the channel. Cyber Monday is currently live here. If you want some information, scan the QR code below the screen right now to get access to EdgeFinder for our lowest price of the year. We'll also drop the link here in the chat. Boom, there it is. 45% off sale happening now. If you send a direct message to our support team using that link, we'll get you the Cyber Monday deal, give you some information on that. If you've waited to see if there's a better deal for Cyber Monday, here it is. Take advantage of that sale right now. We had a lot of people join our Black Friday discounts. We're extending it through here for people who are interested. Take advantage of that while the sale is happening. You can get access to Edge Finder. We also are doing we can split the payment into two if that is necessary for you, if that makes it more accessible. But don't miss your chance. It is the lowest price of the year, the biggest discount that we're doing for Cyber Monday. Take advantage, message in, and we will get that set up to you so that you don't miss it. It's ending soon. Okay, guys, up next, we're going to pass the stream over to Ivan FX, who is, of course, a seasonality bro. He is tried and true, a seasonality pro. And with that said, we'll have him take over the stream in just a second. Stay tuned. Hey, stream viewers, if you're outside of the United States, I have a cool offer I want to tell you guys about thanks to our partnered broker, 8cap. 8cap is currently offering the ability for new depositors to get access to our premium tool, the Edge Finder, completely for free. Now, how this works is basically you create an account and deposit a certain amount of money into that account, and they will essentially buy the Edge Finder on your behalf. So it's a win-win-win. They get a new client for a reputable brokerage, you get access to the Edge Finder and a great brokerage to trade with, and you'll be supporting the show by signing up with 8cap. Now, here are the steps if you want to find out more about this specific offer, but make sure to follow them specifically as we list them out on the screen here. Step 1, navigate to a1trading.com/8cap. That's a1trading.com/8cap. Step 2 is to follow the instructions and to make sure you use the specific link on that screen to sign up for your new 8cap account. Step 3, complete the required deposit amounts and contact their team as instructed on the page. So if you're interested in finding out more about this offer, head over to a1trading.com/8cap, and we'll also be dropping the link to this down below in the live stream chat as we speak. Like I said, make sure to follow those instructions specifically if you'd like to get access to a free copy of the Edge Finder if you meet the deposit requirements as listed on the website. Full information, like I said, can be found a1trading.com/8cap. Now back to the stream.
Alan, well, we're not at a low, but if we go back, if you were a part of the team in Discord, we said Nasdaq should go higher from here. But yeah, that was on Sunday. So that was about a week ago. But I said that also the previous week and then it went lower. So yeah. Fun times it is. Nah, I think Nasdaq should go higher from here. Nasdaq. I was coming Nasdaq is about rip, and then Max. Hi, Max. You have a lot to discuss with me because you said that you want to buy Aussie Swissy. Okay, is okay. I don't know. I don't know if I agree with you. We're quite somewhere in nowhere, man. But okay, cool. I'll pay attention. This morning we had a fall, and my dollar yen trade went into what I would call Ivan freaks out type situation. So I'm thinking about it now. I'm like, did I freak out or did I do the right thing? Back to Japan. If you want to interfere with the market now, I'll be happy. Thank you. Give it to me. Dollar fell in the European session. Yen strength followed. Barely at least. And we hit target on the weekly. Now, last week was a compressed week, so that makes it easier to hit the target. But that makes me very, 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 very uneasy that we have hit a target on the S2, which, by the way, is hitting S2 isn't a normal thing. If we look at, there's no bearishes here, but it's kind of like, what can I say? We normally hit M4, the first one. And if we do the second one, mean, it can happen, but I don't like to be. I don't want to be in trouble. So I took 50 off, and I said, okay, cool, whatever, you do you. Whatever makes you happy, kind of thing. And to me, that's kind of where I am. I just need to, feel safe. So I've saved. I took 50 off. I am supposed to be, according to my rules, be 100% off because it's any target being hit on a Monday, any target being hit today or tomorrow. Now, why do I say 50? Why do I do 50? Why not 100% off my trade? Because that is my original target. And if that gets hit tomorrow, then I played it safe. And by the way, it's not financial advice whatsoever. And I'm talking about just my own trades, whatever I do, stupid things or not. And this is a seasonality move. And it's supposed to end tomorrow or Wednesday. So I'm just trying to grab whatever I can grab. And I got 100, 160, 100. Is it 160 pips out of it or something? Yeah, 160 pips out of it. Yeah, it's okay. It's not fantastic, not great, not horrible, but it is pips. You never go broke taking profits. But I wish for more, so I'll leave it open. Hi, Samuel. What about pound dollar shorts? I mean, it's bullish. So if I were to short something, I would say, okay, I need to break 132, and until 132 is broken, I'm not interested. But a pound is relatively quite strong. I had one of my students say that that there has come out more about the budget that would have made that day more bearish because it's worse than they expected. They held back information, allegedly at least. So to me, maybe that's a reaction, but also dollar had a fall, is now getting stronger. And I said, what if Bank of Japan comes in and makes this one even weaker? That would be fantastic. Great. Thank you very much. So that we can get a flush out of the market and return higher. And what I need now, as to anything that you're thinking about buying or selling or whatever, I want to see that. And I currently don't have that. And I don't know where current level, where the level is going to be where we do such V shape. But if today this is the price 154, I'll agree. We had UADA speak over the night and mornings, and in my view and how I see it, there's nothing new. They are more likely to increase interest rates, blah blah blah. They're waiting for wage growth. Wage growth is going to be posted next Monday, so all eyes on that. And then their own meeting is later in December. So until Monday, we have something to do in between. Hopefully, maybe there. Yeah. So that's kind of why I'm like, okay, we hit target now. What if market just goes back up again, gives away my profits and go into a range? And then we may or we may not fall further. I'm not willing to take that chance. So, but of course, if we continue to drop now, that would be perfect. That would be great. I got 160 pips out of it. I could have gotten more if I sold earlier. But I'm pretty much okay with this. I want to be 80% of my trades. 80%. So I don't want to be the most aggressive seller. I don't want to be the most aggressive take profiter, but I want to of course be. But I want to stay a bit more closer to 80, because if I am wrong, if I wanted to take profit there or there and market only went there, then I lose. If I'm trying to catch 10 pips extra, I may lose all my profits. And tried that before, doesn't really work for me overall in the long run. And that's exactly why I hold dollar yen. I look for as a Swissy, dollar Swissy, sorry. Swap will also cover. So you have short dollar yen, bought dollar Swiss. Going back to dollar Swiss though. Fantastic, by the way. Fantastic idea. But if I were, okay, this is not perfect, right? But I always say this is where you're looking for an entry, right? This is always where you're going to be looking for wherever there's a reversal. So always, 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 always. So that's kind of the beginning, reversal, downtown, up, and then do that. So kind of this is kind of where you're looking for an entry. And also on the also on the bigger time frame, but you are in an overall range on dollar Swiss. And I feel like these ups and downs, ups and downs, ups and downs, ups and downs is driven by, I don't know, randomness. We don't have a clear trend at the moment. But, I mean, that's my opinion on it. I don't like. We have quite a deep push higher now. That doesn't mean anything other than push higher. It can continue lower. It can continue higher. To me, it's a bit too much 50-50. I want control. I want direction. And this is direction. This is control. Go higher. And then once it comes in this place and it comes down there, then I will technically be out. So I don't be a part of that. That'll also be the same either here or here, be also the same situation. So always when you see a brand new lower low below the previous higher low, I'm always out. So that I'll then look down to that level. So it's not good enough for me. Dollar CAD. I mean, CAD was funny on Friday. We all know that I bought Euro CAD about Monday, a week ago, at about 62.38 allegedly at least. And when price was about 162, we had GDP coming out stronger for pound. We have 17 minutes until ISM. Okay, cool. And I was like, okay, we're gonna lose this trade. We're losing this trade. We're losing this trade. We're losing this trade. We're losing this trade. This is horrible. Sorry, we had 2.6, expected 0.5. Last time has been revised down to negative 1.8, and absolutely smashed that GDP out of the park. But dollar weakens, like CAD weakens. Make that make sense. So that goes to the credit of, if the market wants to do something, it would do the opposite. Like if it wants to do something, it would just absorb the news and just go completely opposite. Because that should have made a brand new lower low on CAD, on EuroCAD, and should make CAD absolutely very strong. But I mean, I need to look more into those data and to get the answer of why are you falling, CAD, when you have bullish news. And that's also another why about news trading is you never guarantee the outcome. PMI in 3 minutes. I haven't seen PMI in 3 minutes. I saw it in 17 minutes. Okay. Which other PMIs are you talking about? Because we had manufacturing there. Flash. Oh, USM. Oh, 52.2 versus 51.9 versus 51.9. Yeah, I mean, doesn't this say that America is great, doing okay? There's no bubble. There's no reason to tank the market. That makes S&P 500 go Nasdaq go higher. Slightly. I tried. Euro lower, dollar yen Swiss. Okay, fair enough. Nothing too crazy. But yeah, that's a good number. Okay, so first of all, it's above 50, right? So 52, slightly above, leads to some growth. At least there's not going to be negative growth. It leads to some growth. It's the manufacturing PMI. So that's what, 8%, 10% of the economy. So it's not really that important. But I mean, at the end of the day, it's important for the manufacturing. And if you want to be a bigger manufacturer, aka tariffs, it's okay. It's okay. It's okay. And going back to what we have said earlier is, for you to short the dollar or short the US economy, you want to see this one falling. You want to see this one collapsing or considerably, at least go below 50 at the bare minimum. And you're not seeing that. So you need to still stay and still think that market is going to be great, or is currently very great, and the economy is doing fairly okay. And that should be the basis of your bias, because at the end of the day, in much as you hear and see what out there are in the media or whatever, it's okay. It's an okay economy. What's your bias on dollar? What is it? Bearish? Seasonality bearish. I would also say that the U.S. economy is doing so great that it shouldn't really cut in December. But that's also only based upon the September data. So I'm bearish because I believe that the shutdown has led to more damage than we're currently not seeing. So I believe we're going to cut going forward, but I don't think December was the right one, because we didn't have the data to support it. I would not really know how bad or how good the economy was in October or November, and we probably would never know. So, I mean, since Fed was so cautious during the rise of inflation back in 2022, why can't it be so cautious during the numbers during 2025? And remember, the inflation is 3%. It's not 2. It's not 2.5. It's not 2.6. It's 3. So that remains elevated. And I mean, their current interest rate range is about, is it 3.75 to 4, and their inflation is 3. They're quite spot on and a bit far. And I say, if you are 2% difference between the interest rate and the inflation, a central bank would start to move, and they are within 1 point between they are within 70.75, so 0.75%. So not really cause for any, and I would even say that's actually a cause for pause and wait rather than we're going to go rate cut. Man, know what's the most important of your edge? It's seasonality. Not really seasonality. Okay, so what's my most important edge? I would say seasonality. Seasonality in the shape and the form that I know when to trade and when not to trade. And the most important part of that is when not to trade and when to go away and when to, as you saw, I just did with Max on dollar Swiss. Knowing and understanding that, okay, we have bearish seasonality here until I think it's today. Today was the last day. And now it's turning higher again, right? So, and understanding that, okay, technically we are somewhere here. And if I want to be a buyer, if I want to buy dollar Swiss in my world, I want to be down here. Well, that should have happened way earlier, and market should have pushed this one much lower before turning higher if I were to be a buyer. So in that sense, knowing when to get in, when to get out, preparing for that is a great deal of me staying out of trouble. So I would argue how to reduce your losses, and reducing your losses is a key important part of assessing your strategy and assessing what you do and how you do things. And I mean, I'm not gonna say who and what and where and whatever, but if you are a trader that thinks that, okay, I can short here, cool, I can short here, cool, I can short here, okay, I can short here forever, you are going to get punch in the face at some point. And I always want to look at this particular entry and this particular entry. I don't want to short the third one or the fourth one or anything else after that, because I know that that could happen to me. So knowing where you are, what the market is like, well, knowing the fundamentals as a generality, as where's the market heading. I mean, New Zealand dollar now has a whole new direction. It's bullish. So if you're ever asking me, are you going to short New Zealand? No, you're not going to short New Zealand. Or you can short whatever, but I'm never at the current stage where they are in the cycle fundamentally and central bank monetary policy wise. Am I ever going to think that I am going to short New Zealand at the moment? It might change, but right now it's strongly bullish. It's just going to, and even today made a new high. Friday made a new high. Thursday made a new high. Wednesday made a new high. So it's just going to continue that way. Does it make a pullback and then return higher? That would be absolutely amazing. And thank you very much, sir. But I would only look for the bullish reversal, not the bearish reversal of it. DAX. I don't have anything on DAX. Why don't I have anything on DAX? Other than it should go higher, is because it depends on a lot of European things, and we have just gone into a range. So during the tariffs, a lot of people lost trust in the US government and went to Europe instead. And it doesn't seem to have been really bothered anybody. So FTSE is much stronger and much better placed and stronger trend, and but yeah, unfortunately has a government right now that wants to raise taxes, so that's not great at all. And then you have S&P and then you have Nasdaq at the same time. Which one do I take out of those four? DAX would be my last one. I'm currently bearish on December because of rate cut. Where are you based on? That's probably dollar. Okay, I agree. I agree on that. That's an okay. And even if you say dollar bullish, or S&P 500 bullish for that matter, even if you say bullish, I'm still going to agree with your buys if you can make it a sensible thing. If you can make sense out of your buys, your reasoning is solid. You can not necessarily make any direction for that matter, but if you are going against me, which happens every day, and you can say that based upon these and this fundamentals, you say that, okay, inflation is high and we're not going to cut. We're not likely to cut. Then I'll be like, cool, great. That's a good idea. That's what's always going to be driving the prices anyways. Said differently, what is the most likely monetary policy direction given the data that you have? At the moment, if you ask the Fed members, what is the voting members of FOMC current view on rate cut for December? You're probably going to get some kind of answer out of this, but they have, most of them, a couple of 2 weeks ago, they were quite dovish. They were, quite hawkish, some of them. And which is Vice Chair Philip Jefferson wants to proceed slowly. Susan Collins didn't suggest any urgency to cut. Jeffrey Smead said that voted against previous rate cut and prefers to keep that unchanged. And all of a sudden, who you are going to be listening to of these members is that you are currently finding a divided FOMC. So you can say where are the majority. That's a bit difficult for me to say on standing foot because haven't really seen, but I've just seen lately that there has been a lot of dovish comments coming out and leaning towards a rate cut. And that's why I say, okay, we can do a rate cut. But if you were 2 weeks ago, you saw a lot of members coming out and saying we're going to rate hike. We don't want to change anything, and that's when you saw the change in the likeness of a rate cut. Kind of went from like 70 or 80 to 20 or 30, and then now back up to 80 again. So again, depending on what the Fed member says before our meeting is equally important as where you believe the interest is going to go and the inflation is going to go. And then you can be right, you can be wrong, and then you'll learn from that until next time. And that's how the ebb and flow of market is going to go every single time, every single week, every single month, every single year. Right? Good. So we are slightly a new high in euro. I don't like whatever this position is and whatever this market is. I did not buy the bottom on Tuesday. So that's kind of me in a nutshell there. I don't necessarily want the breakout because that just makes me have a very bad entry if I try to buy it now. So a strength would be nice. Thank you very much. But if it does break, I may day trade it. But again, we have FOMC next week. If we hit a target this week, and that's just a generality, how we target this week so far? Yeah, we're very close to it. Okay, if we hit target this week, then we are probably gonna fall all the way down to central pivot, and then on Monday or so, we're gonna pick it up again. Now, why is that? What do you mean by that, sir? I mean that when you have a market that generally goes in a specific direction before the meetings, we see. When was the last FOMC meeting? 20 what? Was it 29th of October? You generally see a euro dollar rise and then fall and then be kind of neutral when the FOMC meeting is there. And you see the week before it fell, euro dollar fell for that matter, but then reversed. So that at the beginning of the new week it's kind of the same price as the FOMC. So there is nothing to gain in the FOMC week on dollar pairs until the meeting is out, and then we can take a direction. I was long DXY by shorting euro dollar since October, but I only went bearish last Friday. Dollar Swiss expecting the rate cut to get more price in. I saw that, and you are not entitled to answer any of my further questions, sir. But why did you go opposite on dollar? You're shorting euro, buying dollar, and then you shorted dollar Swiss. Okay. But I mean, you should get some profit out of it. Yeah, I'm here. Yes, I'm manufacturing coming out. Whoa, 48.2. That is, of course, breaking news. 48.2 ISM manufacturing PMI. That is 0.4 less than expected and 0.5 a lot more than last time. We are still below 50. Prices paid was coming in at 58, which is still very high, though less than expected. But ISM services 48.2 should give dollar some falling, some slight falling at least. But yeah, that's not great. But again, it kind of contradicts each other. The previous PMI that we had out of S&P Global and now ISM. So what do you do then? One says 48 on the manufacturing, and the other one says 52. What do? Then you have to go back to which of them are better at not predicting, but how much of this final PMI is actually being reflected in GDP. Then US S&P Global is actually a better fit, or is able to catch more of GDP. I think like 90% or something. And there is a slightly less on the ISM. The reason for ISM and S&P Global is different is that these two providers has slightly different data set, and where the other one is slightly more international, or companies who has a bit more international based, so not necessarily just pure US. So yeah. Just have that in mind. So it doesn't really bother me too much. But again, I am late. So I am long EuroCAD. I am short Euro Yen. I am short CAD Yen or so. I took 50% off on dollar yen. And I am planning to flip these positions about tomorrow or Wednesday. So check out Discord and pay attention there. That's where I will post it. And if not, you can follow my YouTube channel, and you can go into Discord and you can get a 1 hour free meeting with me to go through your trading and hopefully make you a better trader. At the end of the day, everyone has said they're really happy about those hour meeting with me. So until then, boom. Love you. See you.
Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing, up to 90%, and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hello everyone, welcome to my segment of the stream. So I hope everyone is doing well. Hope you had a good weekend. Let me just put this down a little bit. So Black Friday has passed. Cyber Monday is today, I believe. The markets, brief summary. So NASDAQ has dropped but is now recovering. Let me check my DNA Funded account. Crap, I forgot to open that. So give me just 1 second to pull that up. If you guys don't know, I'm doing a DNA Funded challenge, and I'm testing out ChatGPT trade signals. Past phase 1, so now I'm in phase 2, and we shall see how it goes. Let me just try to transfer this to my other screen. So let's try it. Yep. Okay, should be good. Let's see now. So this is the phase 2. Current equity 51.380. SPX trade running in some profit. Okay, that's pretty nice. See, plus 2.5% on the phase 2. Target is 5%. Maybe I can finish this by the end of December. That would be pretty nice. And again, this is solely taking signals from ChatGPT. This is the prior account. See, so did 10%, passed it. So now it's on to phase 2. If you guys are looking to get the prop firm challenge, expand your trading capital, I cannot recommend DNA funded enough because they're being ran by professionals. So it's not some kid in a basement. There's a big broker behind the DNA funded. So you get the reputable name behind the firm. And they have good trading conditions. But the most important part is you get a very, very competitive price, which is A1 Live. Okay, so 25% off with the code A1 Live on any funded challenge on DNA. Now, let's get back to the charts. So, as far as the stock market goes, it's down on the day, but it doesn't look that bad. It looks okay. It still looks overall to be in an uptrend. Gold and silver just massive explosion. So silver is going to the moon. Sad story. I got taken out by a couple of points before the big explosion. So I'm still salty about that, but part of the game. Gold is not so bullish, but it's still moving higher. The dollar seems to be just crashing lower. So every day there is more and more weakness on the dollar, which I'm going to mention the reasons why it's happening, because there are a couple of fundamental reasons behind this. Of course, technicals always catch up to fundamentals. There's a fundamental reason for most big moves on the chart. Not everything. Some things are just noise and not explainable or just not available to the public as information. But most of the stuff is controlled by fundamentals. So gold and silver, I have a NZD USD long position, which was a signal in the A1 trading Discord. So this is running nicely, betting on dollar weakness. And the big news for today is the JXY, or the Japanese yen. Japanese yen has started to gain quite a lot of value. We had the Bank of Japan Governor Ueda speaking. It was 12 hours ago. He was hawkish. He talked about the potential rate hike in December, and that's what made the yen gain value. Of course, dovish, lower currency value. Hawkish means higher currency value. So pretty much all of the JPY pairs, such as EJ, AJ, NJ, UJ especially, went down. So USD JPY went down on the daily candle. Definitely a big move lower. So pretty interesting to see that. That is also a narrative flip, because the last few weeks I was pretty bearish on the yen. Now with this new story, I'm flat. I'm not yet super bullish because it is just a potential rate hike. It's not definite, but it's also something to consider that they are considering a hike. So maybe they don't like the current exchange rate of UJ. Maybe they don't like the inflation in Japan. So they want to raise interest rates. We as traders, we need to be prepared. The two most important currencies in the market are always the dollar and the yen. Dollar number one, yen on the second place. If you are a currency trader, you should always know what is the forecast for the dollar, what is the forecast for the yen. Before you do anything, that's the first thing you should cover on the weekend or beginning of the week. Right now, I'm bearish on the DXY. And I'm bullish on the yen, neutral to bullish on the yen. For the DXY, the main reason I'm bearish is rate cuts are coming. So if you did your research, if you looked at the multiple, if you looked at the multiple Fed members, there's 12 of them. So it's not just Powell. There's multiple Fed members. You would notice that they will most likely do a rate cut in December. That's also visible in the Fed Watch tool. Here, see, 87.6% chance of a rate cut. And by December of 2026, there's like a 29.2% chance that the target rate will be 300 to 325. What does that mean? It means aggressive rate cuts. So from 375,400 to 300 to 325. That also means possible bearish catalyst for the dollar. So it looks like we have reached a short-term top on the DXY. This, I still think that we're not gonna go lower than 96. I still think we found the bottom here, but short-term, we also found the top at these points. So exploiting that, I'm of course in a New Zealand USD buy, and I'm looking to buy silver, except silver is now running away from me. But silver would be a great trade to jump onto the lower DXY train, because if the dollar loses value, silver goes up. Essentially, silver is paired against the US dollar. See silver against the US dollar. So that is the story. Also, I have multiple fundamental reasons why I like buying silver. You have the US government that has reopened, massive spending, massive printing. You have Trump's big beautiful bill coming in 2026, massive spending, massive printing. You have high inflation in the United States. Look at the CPI, USD, 3%. That is pretty bad. So 3% inflation, 2% is the target. That's a 1% difference, which is pretty problematic. And they plan to cut interest rates into this high inflation. So most likely they will cut rates in December. They will definitely cut rates in 26, while inflation is elevated. So inflation is definitely on an uptrend in December, in 2026. Best way to protect yourself against inflation: buy gold, buy silver. So silver, gold, they follow the rise of inflation, and I think great buy setups are right here. Also, one more confluence: top setups, gold, bullish score, silver, neutral right now. So okay, it was bullish 2 hours ago. So I'm not sure what happened, but it was bullish 2 to 3 hours ago. At least gold is bullish. So that's good to see gold. I thought silver would be bullish as well, but okay. So yeah, I just listed like 4 or 5 big reasons why you should be long on silver. What am I looking to do? Where are the levels I'm looking to get in? Well, not right here. I think this is overextended. I think this is too far away from the 20 MA. It would be pretty similar to buying this high, right? Getting in right here. That's not the best. So I would like to see a bit of a pullback to, let's say, this level of support. I think that would be pretty healthy. Maybe touch even the 20 MA. So if the 20 MA can catch up to the current price, I would be pretty happy to get in. That would be my general game plan. So the general game plan with silver. Right now, I think we're overextended. And the last time that I got in on this candle, which was around the 20 MA. It was after a pretty healthy pullback. So that was great. Now let me check out the comments. So let me see what you guys are saying. Let's see. Hey Joshua, what's up? Sluggy, hello. Elafi, welcome. I got a half risk long on NZUSD and I'm looking to scale in if we pull back. So yeah, I'm already in NZUSD. I'm not looking to take another position. I'm happy with my initial position. I'm not looking to stack up one more on top of this. If we can maybe reach this high, let's say, that would be good as the first potential take profit. But I don't see a reason why this trade could not run maybe even higher. So I don't have a fixed take profit set. I'm betting on a possible continuation of the uptrend. And then my game plan would just be to trail my stop loss below the swing lows. So that is the general game plan. ChatGPT been free money? Well, so far it's only demo. It's only demo money, so I didn't make absolutely anything so far. But hopefully I do pass phase 2 and then maybe get some payouts. That's the main aim for this challenge is, can I get a payout by using just ChatGPT for trading? Mate, you broke GPT. Normally it has a safeguard. Do not pronounce any directional advice. Yeah, but so I called it a simulation, and ChatGPT calls it a simulation as well in the prompts. So I'm guessing if it's a simulation, then it's okay. How exactly do the recommendations by ChatGPT work? Well, you have all of the details on my YouTube channel, which is Marcos Trading Journey. So you can find free videos on the topic there. Essentially, I made an initial prompt. The prompt is once per day, I get 2 trades, 1 trade on the S&P, 1 trade on a major currency pair of choice. And ChatGPT looks at technical, fundamental, seasonality, sentiment analysis to try and come up with reasons why it should take a position. It buys the S&P, sells the S&P, so direction doesn't matter. It goes both ways. You can just call it a game. ChatGPT loves games. Yeah, so essentially simulation game, and it will work. We have ISM today, do we? Yes, we do. Okay, so it just printed. Looks like it came in pretty much the same as the forecast. Pretty close as the forecast, maybe a bit lower than the previous number though. I don't think there's any sort of a reaction. If we zoom in on the 1 hour, yeah, pretty much nothing. It's not really such a volatile number. It's not really such a volatile print. Ueda was hawkish. Yes, so I think I mentioned that BOJ Governor Ueda is hawkish. Possible rate hikes in December. We will see. Nothing is guaranteed, but the market definitely had a reaction. JXY pushing higher. I'm buying Aussie and NZD this week. Let's see if Aussie CPI on Wednesday could break it. Okay, that's a good plan. I'm definitely bullish on the New Zealand dollar. Nicolasi, good information. Thank you for the feedback. Fantasia, big thanks to Marco Silver is flying with me. Okay, well, congrats if you're still in the position. If you're still in the position, that was a signal in the A1 Discord. I got taken out, unfortunately, but maybe the spreads kept you in. So if you're still in, congrats on being on this huge train to the upside. I'm looking to get back into the game. I believe politicization of the Fed is the biggest weakness for the dollar. So that's pretty similar to what happened in 1929. If you guys want to read an awesome book, 1929 crash book, this one, okay, Andrew Ross Sorkin, 1929, Inside the Greatest Crash in Wall Street History. The conditions that were then present were pretty similar to what is happening today. You have inflation that is pretty high, CPI in the US, pretty high. You have the stock market, which is roaring. I would say it's overall looking pretty healthy. I don't see an issue with the stock market right now. And in those conditions, you have the president, Donald Trump, who is calling for lower interest rates, placing his people inside of the Fed, calling for firing of Jerome Powell. So the Fed is kind of following what the Trump administration is saying, and they're planning on cutting rates. That never ends well. When you get the president's hands inside the Fed, that never ends well. It was never supposed to work that way. The Fed was always supposed to be a separate institution created to govern and help the economy. So if you if you manipulate the Fed, then there's no reason for the Fed to exist. And the Fed should definitely exist to control the huge ups and the huge downs. The Fed definitely knows better than one president, because the Fed is consisted of 12 economists, while the president, Donald Trump, well, he knows a lot about the economy. I cannot say that he's a noob, but he has his own interests, of course. He's a big crypto scammer as well, if you ask me, with Trump coin and Melania coin. If you guys don't know about it, check out CoffeeZilla, Trump coin, Melania coin. Great, entertaining videos, but very sad as well. How can we learn fundamental analysis? I would say the best way is to join the A1 Trading Discord. There is a link in the description of the stream, and with my code Marco, you can get a pretty healthy discount. So you get trade signals, but not just trade signals, you get full breakdowns, full explanations of why we take specific trades, specific setups, so you can learn through the signals, and you can make some money as well. And you get interaction with other successful traders, and you get some fundamental events analysis, and you get a lot of other stuff. Thank you, subscribed. Thank you very much. I just want to say the Edge Finder put to call ratio tool is my bread and butter. Well, that's awesome to hear. And thank you for the feedback. Maybe you can put your feedback in Trustpilot. If the Edge Finder has a Trustpilot, I'm not sure, but that could be very beneficial to A1. I'm short silver. Okay, gold fading the DXY, bad news. Silver put to call ratio on Edge Finder is way too high. Good place to get a quick sell-off. Not my cup of tea. I would definitely not be looking to sell this. But if you have an edge, if you know what you're doing, if you did your back testing, if you did your forward testing, if you structure your risk management properly, then maybe a quick scalp selling the top works for you. But for me, I would never go short in this market. This looks too explosive, looks super bullish. And the trouble with the put to call ratio, if you just place your trades on the bias of the ratio and that's your only confluence, that bias can stay there for weeks. Price can be oversold or overbought for weeks. So I hope you have a good trading edge, but I would be really careful. I missed the rise. I wouldn't normally short metals, but the setup just looks too nice. It's tricky to sell the top, but it looks like it's a top in lower time frame. Just silver is ripping, so depend on your risk. Yeah, if you zoom out, if you look at things like silver and gold with these huge uptrends, you have a much bigger edge by just buying. So it all depends on your skill level. But an interesting thing that Chris Palmer talked about in his part of the webinar, if you participated, it was, I think, 2 weeks ago, he said, how does a casino work? A casino has a small edge against its players. If you look at the roulette table, so casino, roulette table. See, this is the table. So essentially, you have the black and white colors, but then 0 is green and 0 is for the house. So it's not 50-50. It's 49% for you, let's say, and 51% for the house. That's how most of their machines are rigged up. They have around, I think, 54 or 55% edge over their customers. That means if enough customers come in, let's say they have 5,000 customers per month, then the law of big numbers, the law of probabilities will play out, and that 55% edge will make them a lot of money, a bunch of money. And then you get also psychology that people cannot take losses, that people, when they take a loss, they go back in again with 2 times risk. So you get some other stuff as well, but just the probabilities are in their favor. Well, as a trader, you have a much better chance of just buying silver, buying the NASDAQ, buying gold, buying Bitcoin, buying the S&P, because it goes up over time. So the same as a casino, you have an extra edge over other market participants if you just focus on buy setups. Again, I know you guys, some of you guys are scalpers. I know Max is a scalper, but that's the sort of, that's not the normal trader, you know. So I know there's going to be some profitable traders that manage to sell silver, sell gold on the huge uptrends and make money. But for most people, that's a recipe for disaster, because it takes a lot of patience. It takes a lot of back testing, a lot of forward testing, and it takes a lot of chart monitoring to be able to do that. So I'm giving advice more to newer traders, if that makes sense. Scalper on gold only. I believe the book 1929, Jesse Livermore was also active at that time period. Yes, so actually in the book, Jesse Livermore is mentioned quite a lot as sort of the only trader, one of the only traders that made money in the crash, because he was shorting the stock market, the Dow Jones, during the crash. So he made a bunch of money, and then he got death threats, and he got calls every day saying, like, you're a short seller, you stole my money, I'll kill you, blah, 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 which was pretty interesting to read about. I highly recommend the book. Getting back to it, getting back to the charts, we can look at crypto. Sure. Crypto is in the dumps. So crypto looks really bad. Some key levels were broken. For example, this level of support. Then you have a trend line right there was broken. And now it's just a free fall. Also, if you look at the halving cycle, which is something I often talk about in the A1 Trading Discord, we are now in the bearish part of the halving cycle until the November of 2026. And it's not just some crazy confluence. It is a really important confluence to be careful, maybe not be buying crypto until November 2026. Halving cycles, it's a real thing. It's a real phenomenon. It's a seasonality phenomenon. So we are now in the bearish part of the halving cycle. For me to be interested in crypto again, I would need to see us go back through this level of support. So I would need to see this. So regain some strength, regain some levels. That would be bullish. But as far as the current price goes, I'm definitely not interested to do anything at these levels. Ethereum looks even worse. I would say just a massive meltdown, massive sell-off after the huge uptrend. Ethereum does not look good at all. Looks pretty bearish. So that's for crypto. US oil doing nothing really. DXY, JXY, US 10-year is pushing higher on the day, but overall definitely went down. So Trump and company, they definitely do want a lower 10-year yield, because that makes the US debt cheaper to repay. So that's something that they have, well, I'm not sure if they succeeded, because it hasn't fallen to any drastic levels. We're not at 3%, let's say. We're still at 4%. But from Trump's taking of office from 4.8 to 4, it's okay for a year's work, I'm guessing. So yeah, doesn't look that bad. But definitely Trump and company flipped the narrative from trying to pay off the debt to trying to outgrow the debt. So the narrative was, we're going to pay off the debt, we're going to make the debt smaller. That didn't work. He made the stock market crash, because it's all tied together, and I'm not sure how you can even stop such a massive train of debt. I think it's just headed to one big crash, to be honest. I'm not sure how you can even repair all of the damage and all of the debt without massively hurting the economy. You have to know that the modern economy is built on credit. So it's just built on massive credit, massive loans, and it's just built on money that still has not yet been printed and still has not yet been, let's say, paid for. And it's very complicated, but I'm not sure how it ends. What I do know is that Trump flipped the narrative from repaying the debt to let's spend the crap out of everything we can and let's try to outgrow the debt. Will that work? I don't think so, but hey, it's better than causing the stock market to crash. So let's try to outgrow the debt. Crypto looks like a nightmare to trade. Yeah, crypto looks pretty rough. Euro GBP. Okay, Euro GBP will be the last one for today. Let's take a look. Edge Finder. Let's see. Bullish. Okay, bullish reading. I'm definitely bearish, more bearish on the pound than I am on the euro. Although euro is not the greatest. Let's also see the economic heat maps. Let's see EU, bearish, UK, bearish. Not my favorite currency pair, but if I had to give a bias, it would be a long one. Edge Finder is bullish. The pound overall, long-term data. So we just looked at short-term data, but the long-term data for the pound is pretty bad. We're on some really problematic trends. For example, just the GDP for the UK, negative, all over the place. The unemployment rate for the GBP is rising. I would say, why are we missing some prints? I'm not sure why, but it should definitely be rising. Inflation is very high, 3.6%. That's super high. So inflation is a problem. That is called the stagflation scenario. Stagnant growth with high inflation. Never an easy thing to solve. Bank of England, they can't raise interest rates. They can't cut interest rates. It's a problem. So Euro GBP, not my favorite thing to trade because the euro does not seem like the strongest currency right now. But if I had to give it a bias, it would be a bullish one. Marco, do you use kernel regression? No, I don't use it, but sounds interesting. So maybe something for me to check out. And that would be about it. The star of the show is silver. Just looks like a rock star. I would love to buy it. If we pull back to some support levels, I would love to get in. There's not a high chance it will pull back because it usually just goes up without a pullback. But hey, this is the main thing I'm watching. Thank you guys very much for watching the stream. I will see you tomorrow. I'm streaming every day this week. So good luck in the markets and watch out for silver. See you. Goodbye.
Thank you for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want to get put on the nice list this year? Then make sure you check out the A1 Stock Box. That's all for today, everyone. We'll see you tomorrow. Ho, 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 ho.